Why do 90% of retail investors lose money in the stock market? Well, first of all, do they really? Well, let's Google it. And then here's the answer. Approximately 90% of retail investors lose money in the stock market over the long run. Other sources estimate it to be 70 to 97%, depending on the specific time frame, the type of trading, whether it's day trading or long-term investing, and the source of their data. You got a 10% chance of making any money in the stock market over the long term. Why? Well, let's dig deeper and let's find out why and how we maybe can turn those tables around, or at least join the 10% who are making money. Let's dig deeper. Let's go to AI and find out why and how. Okay, so here's what I did. Why do people lose money in the stock market? And here it gives you 4 reasons. Let's start with number 1, lack of knowledge and research. Well, I'll be damned. Insufficient understanding. Many investors enter the market without understanding how it works, the specific investments they are choosing, or relevant concepts such as PE ratio and volume trends. Blindly following tips and trends, relying on hot tips and imminent popular investment without proper research can be disastrous. Ignoring company fundamentals. That's their financials. That's their balance sheets and their income statement and their cash flow statement and their debt to equity ratios. But wait, that's not available to us. That's only available to the Goldman Sachs and Morgan Stanley analysts. That's not, yes, it is available to us as of about 3 months ago. Emotional decision making and behavior, poor risk management, market factors. I believe you got to start with the third word in the explanation: lack of knowledge in research. If you ever want to be successful in the stock market, you have to watch this series that I'm watching. It's called The Titans, The Rise of Wall Street. It takes you through an explanation of how Wall Street came to exist. And it's pretty basic. It starts with J.P. Morgan, a banker in England, who recognizes that there's a growth opportunity happening across the Atlantic in this place called the United States that he needs to take a part in. But he's a banker in England. So he sends his son over to the United States, and he becomes involved in the banking community. But he recognizes, and what J.P. Morgan recognized is that if you want to grow a business, what you do is you go to a bank and you ask them for money to lend you money to grow your business. But banks are regulated; they're very strict. They are risk adverse. So there was a creation of another funding opportunity, and it was called Wall Street. It was where rather than you put your money in the bank and get a low interest rate, you had an opportunity to invest in new emerging companies in this land called the United States, who was going through an industrial revolution in the 1800s, and people were making things and changing the lives of people in the United States on the East Coast, but nowhere else, because they did not have a means to get their products that they were making in Philadelphia, New York, and Boston out to Los Angeles, California. They didn't have a way to do that other than a stagecoach. Well, a few very industrious people said, well, we're having trouble moving our stuff from Philadelphia to New York. We're going to create something called a railroad. And they started building these railroads, and J.P. Morgan said, it's a conglomerate of different owners, and I'm going to put them all together to make them more efficient and more profitable, and I'm going to create a railroad system in the United States. And then he got the wise idea, why don't we take it all the way to California and make these things available? So they go through this, and what you realize is the banks wouldn't finance any of this. So they had to create a vehicle through which people who wanted a better return on their money could invest in this thing called a stock market. Now, think about this. You're a retailer, you're making good money in New York City, and somebody comes and says you can make more money by investing your earnings and your leftover money, not in a bank, but in this thing called Wall Street. And Wall Street was a blackboard in an office where somebody with a piece of chalk kept up with what's the price of Southern Railroad right now, and put it on a chalkboard, and you put your money in. Now, how much knowledge did you have as a retailer of what is a railroad? How does it work? What are its? You had no knowledge. Nothing's changed. Nothing's changed. I mean, it's just, you don't have to go down to an office now and watch the guy change the price of the stock on a stock board. No, it comes to you over the internet, but you're still as ignorant as you were back in 1880. You have no idea what you're buying. You don't know what Netflix does. You don't know what Nvidia does. They don't make chips. They're an architect. They don't know if their chips work. They ask Candace to test them. They don't build the servers. Dell and Supermicro and Hewlett Packard do. You don't know what NVIDIA does. And you certainly don't know what Iron Energy does. Except 3 months ago, the first words in that description of why people lose money is because they don't have the knowledge and they don't have access to the research. That changed 3 months ago when ChatGPT gave us deep research. And for $216 a month, you can build a 4-page prompt that asks, what is the financial health of Apple, of Google, of any stock that you want, and you can acquire the knowledge and the research to make an informed investment decision. So you can move yourself from the 90% who are virtually guaranteed to lose money in the stock market over the long term to the 10% who have access to the knowledge and research to make money in the stock market over the long term. It's that simple. And it just happened. But nobody knows about it except you and me right now. This is just between you and I. And Samantha and Bart. Who's Samantha and who's Bart? They're my AI agents. Don't you remember a year ago when Jensen Huang said, someday you will have an AI agent? What the hell's an AI agent, Jensen? Well, I know what it is. It's a large language platform, whatever one you want, that you build a relationship with, and they know you and they know what you're trying to achieve, and you give them a 4-page prompt that says, this is what a growth company looks like, and these are the traits that they follow through infancy, adolescence, and maturity. Now go find me more. Well, that takes another AI agent. He has to do the research. That's Bart. Samantha does the analysis. Now I can fill the first line of why people lose money in the stock market. I have the knowledge. I have the research. I have access to the data. So I can become a 10%er. I can move on to the level with Goldman Sachs and JP Morgan and whoever your broker is who spends $10 million a month on acquiring the knowledge and the research to make better investment decisions. That's what's changed. That's why I'm outperforming the Dow, the NASDAQ, and the S&P 500 by 3 to 10 times. Because I have the knowledge. I don't have it. Samantha has it. That AI has the knowledge. I have access to it. I know the question to ask. I know what a growth company looks like. Now, what I learned just this week, I can't ask the same question about every stock in every category, in every industry, such as I learned that Bitcoin miners work on a whole different financial framework than data centers do, or than pharmaceutical companies do. I have to have the knowledge to build a different prompt for the different kind of company that I'm trying to access the knowledge and the research on. So some of this falls to me. I have the agent, but I got to be able to tell the agent what to do. And if I can do that, I can become a 10 percenter. You can become a 10 percenter. All you got to do is learn how to access the knowledge and do the research. And then you got to worry about the next three things, about taking the emotions out of it, worrying about market trends. But if you're a long-term investor and you know that the manufacturers on the East Coast are making this iron, this steel, this copper, whatever, clothes, shoes, and they need to get them to California, then you know to invest in the railroad lines. If you know that this data is available and it's going to be available to the rest of the world, then you invest in the data centers. And the people who are making the chips, not designing, making, controlling the switches, the levers, you got to know what the difference is between NVIDIA and ASML and Taiwan Semiconductor and ON Semiconductor and Rambus Semiconductor and Micron Semiconductor. You got to know the difference. And then you got to know what their financial strength is and their weaknesses. And can they raise the money? It's not borrow the money. That's the real learning in this show, The Titans. There's a big difference between banking and Wall Street. And it's all about risk. Banks don't take risk. Wall Street does. Why? Because Wall Street is financed by you and I, and 90% of us are ignorant. We don't know what the hell we're buying. So we will finance, unknowingly, failing companies. We will do it because we're ignorant to the market that we want to play in. Go back, Google it. Why do people fail? 90% of the people fail in the stock market. Lack of knowledge and research. What more do you need to know? I'm Kerry. I'm a retired financial advisor. I figured this out. I've written my prompt, and I'm sharing it with 1,000 people. That's all. Because if I share it with 1,000,000, I lose my arbitrage. I lose my advantage. And right now, I have a major arbitrage. I have access to that knowledge, which creates research, which makes me part of the Wall Street 10% machine. I hope you see the light. I hope you get on the bus, because there's only 300 seats left. I won't be talking to you much anymore because I'm only going to be talking to the 1,000 people who have seen the light. Why do 90% of the people who invest in the stock market, retail investors, lose money? Lack of knowledge and research. It's that simple.